Hello and welcome. You're watching Money9. I'm Krishnakumar, and today we have a very special edition of Money Masterclass that's going live. We have a very special guest joining us here on Money Masterclass, and this Money Masterclass is for all those of you who are just getting started with your journey of investing in the stock markets. 9 tips for stock market beginners. That's what this Money Masterclass is all about, and we have a very special guest, renowned YouTuber and CEO of Finology Ventures Limited, Mr. Pranjal Kamra, joining us here on Money9's Money Masterclass. All right, Pranjal, as for all those watching this is all about getting people started, getting sort of the mindset right when it comes to investing in the stock market, because that's very important. And you have come up with 9 tips, 9 tips for stock market beginners. We're going to go one by one on those tips. First of all, thank you so much for taking time out to be with us, Pranjal, and Mr. Busy schedule. So let's begin and go one by one without wasting any more time. Number one tip from Pranjal Kamra for stock market beginners. What would it be?
So first would be definitely thinking long term. In this bubble since last 1 year, most people think of it as a quick money making machine, which the stock market is not. Because returns come in this market in chunks, but not necessarily quickly. You could stay invested for 3 years, 4 years, and the market could not go anywhere. That could happen as well. So just because the recent past has been very good does not mean that we assume that the market is for short term or you could make quick money in the short term. Ultimately you are investing in businesses, and these stock prices rise only when, in the long run, only when the earnings rise, only when the business does better than it was previously. And these are big businesses. Most businesses that are listed in the stock market are big businesses, and they take time to grow their earnings, and thereby it would take time for your stocks to grow as well on an average. So don't take these past 1 year returns as the benchmark. That's the number one important tip.
So clearly, number one, think long term in all aspects. Whether it comes to your own investment journey, don't look to look at a 2 year, 3 year horizon when you start investing in the stock markets. Give yourself a lot of time. Give the companies that you invest a lot of time. Think long term. That's tip number one from Pranjal Kamra for stock market beginners. Now moving on to tip number two, because Pranjal, we're calling these tips because stock market journey is all about receiving tips and investing in the stock markets and investing in the right stocks and getting the right returns. But before you start acting on those tips, you need to get your mindset right. And these are the tips to get your mindset right. Tip number one is think long term. What is tip number two?
So that is important. So the second tip is, it's very important avoiding herd mentality. Again, when you have entered the stock market, you see everyone around you making money in a particular stock or a particular asset class or in a particular theme. But you don't buy a shoe that your friend like. You don't buy a car that your friend buys. You buy all of these things out of your own choice. And thereby it's very similar with stocks as well. You don't buy what your friend is buying. You don't buy what's recommended on the television or on the magazines. You buy what you know. So, if you are a banker, you know how your bank is doing and how its competitors are doing. So you think from your experience and buy a banking stock. If you are into sales, FMCG sales, pharma sales, you know how these competitors are doing, and you invest as per your knowledge. So do not follow what's hot in the market. By the time you enter, it's already too late.
Wonderful. That's tip number two. Avoid herd mentality when you're investing in stock markets. Pranjal, actually, this goes for life per se, in my humble opinion. For everything in life, for every investment that you make or everything that you do, you should always avoid herd mentality and be as individualistic as possible. And it's equally true for the stock markets as well, coming from you. That's tip number two. Avoid herd mentality. Now, at this stage, for all those watching this broadcast, we here at Money9 are very, very focused on helping you achieve success in your financial journey, especially in your stock market journey. And we have a lot of videos lined up on our YouTube channel. Make sure you subscribe to our YouTube channel. You can also follow us across all social media platforms: Facebook, Twitter, LinkedIn, and Instagram. @Money9Live is our handle. You should also log on to our website, www.money9.com, for all the latest from the world of personal finance, for all the information that you need, for all the advice and tips that you need. to continue with your investment journey in the best possible way, log on to money9.com. Now, quickly getting back to the market masterclass that we're in the middle of with Pranjal Kamra. Pranjal, tip number one is think long term. Tip number two for stock market beginners is avoid herd mentality. What about tip number three?
Yeah. So this is a part of it I spoke during the second tip, investing in what you know. Because what happens is these stocks are really volatile, very volatile. And if you buy a stock at 200 rupees and you find that it's now at 150 rupees or 100 rupees, most likely you will panic and try to exit that stock in a loss. Only if you have invested in a company that you know, will you be confident enough that I know about this company, it's going through a temporary problem and I know it will bounce back. You'll get that confidence only if you have invested in a company you know. So we can differentiate between a temporary problem and a permanent problem only if we know that company inside out. For beginners, it's best if you invest in stocks. So if you're a college student, if you're just starting out and you don't know any particular industry, you don't have working experience, what's great is you invest in companies of which you are a consumer. So a soap company, a bike manufacturing company, a cloth company, at least you have the customer point of view and at least you can discuss it with your friends whether they like the particular brand or not. So investing in what you know is the next important tip.
Clearly, again, another stock market tip that just parallels life. Do things that you're well aware of, that you've already understood. So in stock markets, clearly, tip number three from Pranjal Kamra is that invest in businesses that you understand, or in other ways, do not invest in companies or businesses that you don't understand. Always invest in businesses and companies and sectors that you understand. That's tip number three for stock market business from Pranjal Kamra. Quickly moving on to tip number four. Tell us, Pranjal, what's tip number four?
Right. So the fourth one is don't try to time the market. Ultimately, in investing, you have a lot of uncontrollables, a lot of things which are not in your control. And the honest truth is, we can buy great companies, but whether the stock moves tomorrow or not is not in our control. And when we try to do that, we try to be too smart, and often we miss out on those days where the stock actually moved because by then we have lost patience. So, ultimately, which day the stock will move is not in your control. What's in your control? Buying a good stock. And then when you have, a portfolio of 15 to 20 good stocks, anyways, one of them will keep moving every month or so. So don't judge your stock on a particular month or 3 months or 6 months. Your job is to pick 15 great stocks, and then one or the other will keep moving and your portfolio will keep giving you good returns.
I just want to ask you quickly, when it comes to this whole idea of timing the market, there's also always talk of the right time to enter the stock markets. Maybe, when the stock market is down, when it's dipping, is it the right time to enter the market? If it's already a bull run that's waging, is it then a good time to enter the market because all stocks are overpriced? So, when it comes to, when you say don't try to time the market, do these things matter? At what levels the Sensex and Nifty are if somebody wants to begin investing in the stock market?
So, I would categorize, so this is not a blanket answer for anyone. It depends. So if someone who's young, just starting out, and all his income is in future, so all his cash flows will come in the future, it doesn't matter when you start investing, because even if the market crashes, you'll always have incremental cash flows coming in the future to average it out. But for someone who's 55, 60, about to retire and looking to invest their life savings in the stock market, first of all, they shouldn't. But even if they're looking to invest in mutual funds and they want to do a lump sum, they need to be very careful because they won't have future cash flows coming in to average out in case the market crashes. But for youngsters, anyone below 35, majority of the cash flows coming in the future, investing and putting your money in the market, there's nothing more important than that.
All right, before we go further with the 9 tips for stock market beginners, for all those watching this broadcast, many questions are coming in, Pranjal, from the viewers as well to you. I'm going to pick out one of those questions. This question is addressed to you. Pranjal, you have Jahid Islam asking you this question. He's asking, sir, do you think that penny stocks can make us rich? It's the question that's always asked about the stock markets, because penny stocks are within the reach of the common man who's investing in the stock markets. And the great hope is that these penny stocks advance quickly and give us the returns that we all want.
Right. So I know, and the first answer would be, think about this. If a stock is a penny stock, it's a penny stock for a reason. There's something wrong going on in that company because of which it's a penny stock. That's one way to look about it. Second, the contra view is any stock could be a penny stock. If a stock is trading at 100 rupees and the company decides to split it or give bonus, if you hold one share, you get 100 shares bonus. The next day, the stock price will go to one because the earning per share behind that stock is also divided by 100 shares now. So, I think price of the stock, whether it's 2 rupees, 20 rupees, 200 rupees, or in case of MRF, 70, 80,000 rupees, a lot of people think MRF is the most expensive stock, which it is not. Wipro, Infosys would have worth lakhs of rupees per share if they wouldn't have split it, they wouldn't have given bonuses. The fact that they wanted to keep their unit affordable for the common man, and which is why they kept splitting it. So I don't think, by the market price of one unit, you could judge anything about a stock. Any stock could be a penny stock if they decide to divide it into 100 units and the earnings per share. So it's like first having a 100 rupee note and then exchanging it for 101 rupee coins. Ultimately, what you have is the same. Doesn't matter. So don't judge a stock by its ticket price. It does not tell you anything. Yes, if it's a few paisa, 1 rupee, 2 rupees, most likely it's a bad company in 90% of the cases, but there's no blanket answer to it.
Fair enough. That's an answer for Jai Islam's question on how to invest in penny stocks for stock market beginners. Pranjal, we've done with about 4 tips for the stock market beginners that on this broadcast. Let's continue on that front as well. What is the 5th tip that you'd like to give stock market beginners?
So, right. So a lot of beginners ask me this, that how much should they invest? If they're starting out, how much should they invest? So this is an important one. Invest any amount that you can afford to lose, and it will not affect your tuition, your education, or your general lifestyle. Anything that's surplus, anything with which you have partied for the weekend, dined in an expensive restaurant, anything you can afford to lose without affecting your quality of life in general, that is the amount you should start with. Why? Because definitely as a beginner, you will make a lot of mistakes. And it's a part and parcel of learning. When we learn to swim, we learn to cycle, we learn to walk, we fall. And similarly, this is going to happen in the stock market as well. When you start, you will fall. So, make sure that you don't injure yourself too much.
All right, make sure you don't injure yourself too much is the word coming in. And the most important point you're trying to make is that do not invest money that you need for your basics. Always only invest the money that is in excess of your basic necessities in terms of everything. Even your basic investments is also counted in it, isn't it, Pranjal? You should invest in your insurance, and other basic things, and then only the surplus money should be invested in the stock market. That's the word coming in from Pranjal Kamra. That's tip for stock market beginners number 5. Let's move on to tip for stock market beginners number 6, Pranjal.
So Krishna, you actually stole my 6th point with what you just said, which is stop loss. So, when a lot of people talk about stop loss, they think of it in a very narrow way, wherein, someone is trading and they put a stop loss that whenever a stock falls to a particular level, the order is automatically executed and it's sold. I think that's a very narrow perspective of stop loss. That's one of the technical implementation of stop loss. Stop loss for me is anything that protects you from financial destruction. So, what would save you from financial destruction? Having the right health insurance. I think after the pandemic, we all have recognized the importance of health insurance. It's having adequate life insurance. And, with life insurance, it's also important that for whom to buy life insurance. Often, either people end up buying too less insurance or too much insurance because someone sells them too much insurance. Life insurance for everyone. So one important thing is only buy life insurance for earning members of your family, having adequate amount of emergency funds in a very liquid form, say liquid fund, saving account, at least 8 to 10 months of emergency fund. So that for me is your stop loss. If you have all these basics in place, is when you're ready to invest in mutual funds and stocks. Also, I see a lot of people taking loans and then investing in the stock market. This is extremely risky because on loans, your payouts are fixed. You have to make payouts, EMIs, whatever. But your returns on stock market are not guaranteed. They might be more if everything turns out to be great, but they're not guaranteed. So you have a guaranteed payout and you don't have a guaranteed pay in. Very, very dangerous. So get your basics in place and then invest in the stock market.
Get your basics in place is the word coming from Pranjal. For all those excited about all those high astronomical returns in the stock market, it's important to get your basics right. And that's the word coming in from Pranjal Kamra. Pranjal, moving on to the next stock tip, number 7 for stock market beginners.
Right. It's about choosing the right platform to start your investing journey. When I started investing, unfortunately, these discount brokers, this online investing was not there in 2013, 14. And I remember opening my demat account for 6,000 rupees. I had 25,000 rupees. Out of that, 6,000 was spent just on opening my demat account. And then I had to pay huge brokerage as well. Thankfully, all of that has reduced to a lot of extent. But still, I mean, we saw a couple of years ago one of the brokers failing, one of the big brokers failing. So you have to be careful. Just because a new broker is launching and it's offering you the maximum leverage, thankfully it's capped by SEBI now. But still, if some broker looks too good to be true, he's offering you things which are too good to be true, stay away from that. It's your money. When we choose a bank, we are very careful because our money will be kept with our bank. I think similar amount of carefulness needs to go when you're choosing your broker, because ultimately the broker will have your funds for a few days until you buy the stock. So it's like giving money to the bank, and in bank your money is still insured up to 5 lakh rupees. Here it's not the case. So you need to be careful, and it's not just about the breaker failing or running away. It's also about how convenient it is, what are the investment options that your broker provides, how's the customer support, and things like that. So just be slightly careful. In fact, we have a product called select.finology.in where you can come and compare brokers as well, so which is specifically built to cater to such confusions.
Wonderful. So choose a reputable, reliable stock broker is stock tip for stock market beginners number 7. Now we've just got 2 left. Let's move on with it, and we'll take some more audience questions that are coming in as we speak. Tip for stock market beginners number 8, Pranjal.
Yeah, so it is being disciplined and patient. What happens that in the stock market, people make money doing all kinds of things. Somewhere down the line, you would feel that I bought this stock doing so much of research, and that guy bought a stock blindly and he's making a lot of return and I am not. Is where we move out of our circle of competence. So on the first 2 tips, I told you that invest only in what you know. Now you might know, say, clothing sector, which is not very hot these days, which does not move very quickly these days, but that does not mean that you move to the crypto or the IT sector. It's because ultimately every sector has its time, every sector has its cycle. So even if your sector is currently not trending, it's about being disciplined, because what happens is, if you make money not following the right path at times, that becomes a habit. Now you'll always drift away from your path, and in the long run the process matters. In the short run, if you have to be successful once or twice, luck matters, but in the long run, process matters. So sticking to your process, it's very, very important, because you have to do it for the next 30, 40 years of your life. It's just not a one time game. So being disciplined is critical.
The process is important. In fact, they say this for all big sports as well, especially in cricket. Especially after India lost the World Test Championship final, they said it doesn't matter if you lose at one Test match. It's all about the process. It's all about building the team. Same with when it comes to building your stock market portfolio. It's all about the process. Do not get distracted by one loss. Idhar udhar doesn't really matter as long as your process is correct, you're disciplined, and you're patient. And finally, before we move on to taking some audience questions, stock tip for stock market beginners number 9, Pranjal.
So it's about not being emotional, and I'll tell you. So 20, 30 years ago, when my father used to invest, he would tell me that because information was not available real time, in a lot of sense it was a blessing in disguise, because even if you wanted minute by minute updates 30 years ago, there was no way to get it. Now with commentary on every stock available second by second, a lot of that news coming in, it gets information overload. Our brain is confused, it's not in a position to take the right decision. So in fact, we run an investment advisory, and there's this thumb rule in our organization that we don't look at the market levels between Monday to Friday. We check what has happened on Saturdays, because mostly on most days nothing spectacular happens, and if something extraordinary or spectacular is happening, we would anyways get to know it without actively seeking it out. So I mean, this minute by minute tracking, my stock is 2 rupees down, 1 rupee up, All of that, it confuses your brain and you end up taking a lot of decisions which you don't intend to. So it's important to remain, not become too emotional about your decisions, which will only happen when you detach yourself to an extent.
Wonderful. That's, ladies and gentlemen, is the 9 tips for stock market beginners from Pranjal Kamra. Pranjal, the last tip especially is so true, so philosophical for life as well. Be detached. Don't be over emotional. Be detached is true for life if you want to find success in life. And the same applies for stock markets as well. So thank you so much for bringing us those 9 tips for stock market beginners. Quickly, we'll take some audience questions, Pranjal, that's coming in. We have somebody called Ashish Darji asking a question. Can we make money with the help of technical analysis in the stock market? Your quick response to that. Can we make money with the help of technical
So I don't
analysis in stock market?
so I don't believe in that. I mean, I don't follow technical analysis, and my simple analogy to this would be, the past. What are charts? What is technical analysis? Analysis of past price movements. Now, past price movements are a result, are a consequence of all past political, environmental, economic, industry specific, and company specific events, and thereby it moved in a particular pattern. Now, if I try to project something based on that pattern, I'm projecting that a similar trend of past events will also happen in the future. Does not sound logical to me, and therefore I don't believe in it.
All right. That's Pranjal Kamra's view on technical analysis. One more question coming in from Avnika Sethi. Avnika Sethi is asking Pranjal, what would be the one golden mantra for someone who's just starting to invest in the stock market? We've discussed 9 tips over here for stock market beginners in this video. If at the end of all of this, one golden mantra from your side for somebody who's just starting to invest in stock markets.
So, there was this survey conducted wherein in US, wherein 10-year-olds were asked to pick stocks, and they picked stocks like Disney, Barbie, Cadbury, and things like that. And parallelly, chartered accountants were asked to pick stocks, and they picked out after a lot of financial analysis. After 5 years, the results were compared, and the children's portfolio outperformed the stocks picked by the financial experts. And this tells me that the very basic of investing is invest in products that you use as a consumer. That is one golden rule.
Right, and with that, we've completely run out of time here on this market masterclass session with Pranjal Kamra here on Money9. I'm going to thank Pranjal Kamra for taking time out in between his busy schedule to be with us over here and give us these 9 tips for stock market beginners and answering all the viewers' questions through the course of it as well. Thank you, Pranjal, for being with us. We hope to keep seeing you again and again here on Money9. With that, it's a wrap on this edition of Market Masterclass on Money9. All those watching this broadcast, make sure you subscribe to our YouTube channel. Make sure you follow us across all social media platforms, Facebook, Twitter, LinkedIn, Instagram, @Money9Live is our handle. You should also log into our website, www.money9.com, for all the latest from the world of personal finance, for all the advice and lessons and encouragement that you need to invest in the stock markets, to continue your personal finance investment journey. All of it is available on money9.com. So make sure you log into our website. It's a wrap here from my side on this edition of Market Masterclass. Thank you so much for watching. This is Krishnakumar signing off.